Welcome to E for Education, your one-stop channel for all things educational. Today's topic is balance of payments. We're going to embark on a journey, exploring one of the most crucial elements of international economics, the balance of payments, or BOP, as it's commonly known. Why is it important, you might ask? Well, it's a comprehensive record of a country's economic transactions with the rest of the world. It helps us understand a nation's fiscal health and economic standing on the global stage. It's like a financial report card for countries, providing insights into their economic strengths and vulnerabilities. So whether you're studying economics or just curious about how the world economy works, understanding the balance of payments can give you a broader perspective. And don't worry, we'll keep it simple and easy to grasp. Stay tuned as we delve into the fascinating world of economics. So, what exactly is the balance of payments? Well, let's break it down. Imagine you're running your own little country. You've got people buying and selling goods, traveling abroad, investing in foreign companies, and so on. All these transactions contribute to the flow of money in and out of your country. Now, wouldn't you want to keep track of all these transactions? Of course you would. That's where the balance of payments comes into play. Think of the balance of payments as a ledger that records all economic transactions between the residents of your country and the rest of the world over a certain period. It's like a detailed financial diary that keeps tabs on all the money coming in and going out. And just like your personal bank account, it's essential to maintain a balance. You're probably wondering, what kind of transactions are we talking about? Well, they can be anything from the export or import of goods and services to financial transfers like foreign investments or aid. If your country exports more than it imports, that's a positive balance of payments. Good job, you're earning more than you're spending. But if your country is importing more than it's exporting, that's a negative balance, which could lead to borrowing and debt. Here's a simple way to visualize it. Imagine your country as a big corporation. The balance of payments is like its financial statement, reflecting its economic health. It shows whether you're running a profit, which is a surplus, or a loss, which is a deficit. Balance of payments isn't just about trade, though. It also reflects money transfers for things like foreign aid, remittances from abroad, or investment in overseas companies. It's a comprehensive snapshot of a country's financial interactions with the rest of the world. In essence, the balance of payments is like a country's financial report card. It lets us see if the country is living within its means or getting knee-deep in debt. And just like a report card, it's an essential tool for diagnosing problems and charting a course for future economic health. So, the next time you hear about the balance of payments, you'll know exactly what it means. Now let's break down the balance of payments into its key components. The first component we're going to look at is the current account. This is essentially the report card of a nation's economic health. It measures the flow of goods, services, and investments into and out of the country. This includes exports and imports of goods, earnings on foreign investments, and even transfers like aid and remittances. When a country exports more than it imports, it has a current account surplus. But if it imports more than it exports, it has a current account deficit. Moving on to the second component, the capital account. This records the transactions related to international transfer of capital. It includes transfers of financial assets and changes in a country's foreign assets and liabilities. For instance, if a country sells or buys land, patents, or trademarks to or from another country, these transactions are recorded in the capital account. Lastly, we have the financial account. This records all transactions involving changes in ownership of a country's foreign assets and liabilities. It includes direct investments, portfolio investments, and other investments like loans and reserves. Direct investments refer to the purchase of physical assets like factories or businesses in a foreign country. Portfolio investments, on the other hand, include transactions of financial instruments such as stocks and bonds. It's important to note that these three components are interconnected. For example, a deficit in the current account must be financed by a surplus in the capital and financial accounts. This is because a country that imports more than it exports is spending more foreign currency than it is earning. To finance this deficit, it can either sell its assets to foreigners or borrow from them, both of which would be recorded as surpluses in the capital and financial accounts. In a nutshell, the balance of payments is like a ledger, recording all economic transactions between residents of a country and the rest of the world. Each of these components plays a crucial role in calculating a country's balance of payments. Let's put this into perspective with a real-world example. Pakistan. In the context of Pakistan's economy, the balance of payments gives a comprehensive snapshot of all the economic transactions between Pakistan and the rest of the world. It's like a ledger, recording all the inflows and outflows. Let's break it down. The current account, which is one part of the balance of payments, primarily includes trade of goods, services, and income transfers. For instance, when Pakistan exports textiles to the United States, this is registered as a credit entry, an inflow of foreign exchange. Conversely, when Pakistan imports oil from Saudi Arabia, it's noted as a debit entry, an outflow of foreign exchange. Now imagine if Pakistan's imports exceed its exports. This would result in a current account deficit, indicating the country is spending more on foreign trade than it's earning. And this is where the capital and financial account comes in. The capital and financial account records transactions of investment and loans. If Pakistan borrows from the International Monetary Fund or attracts foreign direct investment, these inflows help offset the current account deficit. However, it's crucial to remember that these are not simply free money. Loans need to be repaid, and investments expect a return. In recent years, Pakistan has faced current account deficits. To manage this, the country has sought loans and attracted investment, but it's also working on boosting exports and reducing unnecessary imports to achieve a more sustainable balance. The balance of payments also includes the country's reserves, the foreign currency held by the central bank. These reserves act as a cushion, helping the country manage unexpected economic shocks. In Pakistan's case, maintaining a healthy level of reserves is crucial to ensure economic stability. In essence, the balance of payments paints a picture of a country's economic health, showing where it stands in terms of its financial dealings with the rest of the world. As you can see, the balance of payments provides invaluable insights into the economic health of a country. So why should we care about the balance of payments? That's a great question. The balance of payments, or BOP, might seem like a dry, complex financial concept, but it's actually a powerful tool that affects many aspects of our lives. First off, understanding the BOP allows us to make informed decisions. If you're an investor, knowing the BOP can help you decide where to put your money. For example, if a country has a positive balance of trade, it might be a good place to invest, as it shows that the country is exporting more than it's importing, indicating a healthy economy. Similarly, if you're a job seeker or a student deciding on a career path, the BOP can provide valuable clues about which industries are thriving and which are struggling. Secondly, the BOP is a key tool for economic forecasting. It can help predict future trends in the global economy. Economists and policymakers closely monitor the BOP to anticipate potential economic crises or opportunities. A sudden shift in a country's BOP can be a red flag, suggesting underlying economic issues that may not be immediately apparent. Conversely, a consistently positive balance can indicate robust economic growth. Finally, understanding the BOP is crucial for policy development. It provides valuable insights for governments when formulating economic policies. For instance, if a country has a persistent trade deficit, the government might want to encourage exports or limit imports to balance things out. Conversely, a country with a large current account surplus might need to stimulate domestic consumption to avoid economic stagnation. In a nutshell, understanding the balance of payments is like having a roadmap of the global economy. It shows us where we've been, where we are, and where we might be heading. It's a tool that helps us navigate the complex world of international trade and finance. So whether you're an investor, a student, a policymaker, or just someone interested in the world economy, understanding the BOP is definitely worth your time. Understanding the balance of payments equips us with the knowledge to make informed decisions about our economy. That wraps up our discussion on the balance of payments. We've journeyed through the ins and outs of this crucial economic concept, starting with a simple definition and then diving deeper into its components. We've looked at exports, imports, and the financial account, and how they all come together to form a country's balance of payments. We've also seen how this concept applies in a real-world context, using Pakistan as a case study. Understanding the balance of payments isn't just for economists or policymakers. It impacts our everyday lives, influencing everything from the price of goods to the strength of our currency and even our country's relations with the rest of the world. So remember, knowledge is power, and understanding complex topics like these can only serve to empower us. Thanks for joining us on E for Education. Don't forget to like this video, subscribe to our channel, and share our content. Stay curious, stay educated.